We're in the midst of a tech revolution, the likes of which we've never seen before. So, how can investors best position themselves? Raoul Pal of Real Vision joins me today to discuss.
Welcome to Inside the Vault with SWP. Join Mark Yaxley as we explore the latest news, reports, and some Bullion Basics for investors old and new. Let's get to it.
Hello, everyone, and welcome back to Inside the Vault with SWP, a weekly show where we dive into the world of precious metals and investing with the brightest minds in the space. If you're new to the show, you can find all of our previous episodes posted on the Strategic Wealth Preservation YouTube channel, alongside of a lot of other great precious metals investing content. While you're there, please do us a favor and make sure to subscribe to the channel, hit the notification bell, drop us a like or a comment. Your viewership and support goes a long way to helping us grow the channel devoted to educating investors on the importance of holding precious metals. I'm your host, Jeremy Varlow. Very exciting episode today. As I mentioned, I'll be joined by Raoul Pal, CEO and founder of Real Vision, who will be with us very shortly. But let's kick things off, as always, with Mark Yaxley and his weekly market update. Mark, take it away.
Hey, Jeremy, definitely excited to speak to Raoul today, but not a bad week for gold and silver as well. Let's not forget the metals. The consensus amongst precious metal analysts is that their forecasts for gold in Q1 of 2024 were not bullish enough. On the other hand, their outlook on silver during the same period of time was perhaps overly optimistic. So we're going to do a little bit of a dive into that. As we move into Q2, analysts are feeling optimistic about the prospects for both gold and silver for the remainder of 2024. They've just issued revised price target ranges for the remainder of the year, which I wanted to share with our followers. So the original 2024 price range for gold was predicted by analysts to be between $1,900 US to $2,200 US per ounce. We've already surpassed the $2,200 mark by a healthy margin. The revised 2024 price range for gold is now predicted to be between $2,000 to $2,475, which is the highest prediction I've ever actually heard from analysts who I fundamentally believe in. That's about 10% above today's price. The original 2024 price range for silver was $2,150 to $30 US per ounce. The revised price range for silver is now $23 to $32, or about 20% above today's price. So really good news for precious metal investors. Again, this is coming from very credible analysts that are looking at both technicals and fundamentals. The demand for gold, as we know, has been stronger than expected, particularly in the Asian market, coupled with consistent buying by central banks and persistent underlying geopolitical risks. Nothing has changed there. Additionally, neither mining production nor secondary market buying, so basically gold that already exists in the marketplace that could be sold back into the market, has not re-engaged at these prices. So basically, we're starting to see a little bit of a glut in the availability of gold, which is helping drive the prices up. Silver remains a very appealing trade. It has not mirrored the positive trend that we've seen for gold, or not as closely as people would have expected. Despite being up 5% in Q1, analysts believe that reduced mining output for silver, coupled with, again, decreased above ground supplies, and this goes all the way back to 2021, so not a new trend for silver, has positioned silver for a breakout. The development of a gradually then suddenly scenario is very, very much in play now for silver. So let's keep an eye on silver, and back to you, Jeremy.
Thanks, Mark. Let's get this show on the road here. As I mentioned, I'm very excited to welcome our guest today. Raoul Pal joins us. Raoul is the CEO and founder of Real Vision, which is a finance media platform aiming to democratize access to expert financial analysis. Raoul himself is a former hedge fund manager and Goldman Sachs alum, and is widely regarded as one of the foremost macro thinkers and investors, who also publishes his thoughts in his monthly institutional research paper, The Global Macro Investor. Raoul and Real Vision have helped me on my investing journey, and I'm excited to have him on the show today to share his insights with us. Raoul, welcome back to the show.
It's great to see you. Looking
Great to
forward to
see
this as always.
Yeah. Yeah, great to see you as well. Let's jump into things. We've got, a lot to unpack. I know you're used to, really long form content, hour-long conversations. We don't have that much time today, so let's kick this thing off. To start, just a little bit of a primer on Real Vision. A lot of our audience is familiar with Real Vision, but maybe you can kind of give me the elevator pitch on RV. What does it mean to democratize access to financial analysis? Who can
Yeah,
benefit from the platform? What is the content all about?
Real Vision, just to give you very briefly, I co-founded this business back in 2014 because I'd predicted and been through the financial crisis 2008 and the 2012 European sovereign crisis. So anybody in gold markets will understand how important those two events were. And I predicted these things. I'd seen what was going on, and people would come up to me in the street and say, "Why didn't we know?" I saw the rise of Occupy Wall Street. People were angry, but they didn't know who to blame or what was going on. And so I thought I can do something about this. I can democratize access to the kind of information that I got at the epicenter of Wall Street from Goldman Sachs and running a big hedge fund and give it to ordinary people. So the original idea was just interview the world's smartest investors, most famous investors, the best analyst strategists. Then we added research product, but over time it's developed into a platform. And it's a platform for people to live their financial lives. So not only do you get the amazing content, but you also get access to the knowledge, tools, and network that allow you to thrive in your financial journey. Because most of us see all this information, it comes at us all day. But what we try and do is help you turn that into knowledge and eventually wisdom. The tools are the things that you use in your everyday, whether it's the market pricing tools or even now AI tools to help you be a better investor. And then the network. The network's amazing. The network is all of the people, the tens of thousands of people who are Real Vision members around the world, be they in Canada, be they in India, be they in Australia, be they in the South Pacific, wherever they are, they can connect with each other on the platform, share ideas, get to know each other, and get together for events, etc. So that's what Real Vision does. It really is to help people in their journey to navigate what are really complicated times.
Yeah, and I mean, I can speak to the network a little bit. And a small caveat, I used to work at Real Vision, so I have a bit of knowledge here. But yeah, I mean, the platform and the content is amazing, but the network is super special in its own right. I mean, I've been to events that Real Vision's put on. I've been to other conferences and whatnot and walked around with my Real Vision shirt, and people stop you every couple of minutes and strike up a conversation. It's such a diverse mix of people, knowledge bases, interests. It's really quite powerful, and it's a great platform. I want to kind of dig in here. We'll start to get into things now. This is a little bit big picture, but obviously you're known for your macro investing insights, and I'd love to get a little bit of a line on those. What you're seeing, what your macro outlook for 2024 is in a nutshell. You've actually recently been tweeting about macro summer. You think that we are in the beginning stages of this. What is macro summer, and what is your kind of big picture outlook for 2024?
I'm going to go a little bit bigger first and then come back into today. We are faced with a world that is laden by debt and an aging population who can't pay for that debt. The governments can't raise taxes enough to pay for the costs of the debt. We're in this big mess. And the mess, as anybody in the gold markets will know, is really about debasing currency. People used to think inflation was the enemy, but it's not the kind of inflation you're used to. It's the inflation of asset prices going up while incomes don't. And that's because they keep adding excess liquidity, which is money printing via different methods, into the market. So last year, 2022, we saw the markets all take a dive. And that was based on liquidity coming out of the system. Liquidity is actually the biggest driver of asset prices. Everything is correlated. Back in 2008, all the central banks around the world reset interest rates to zero. So they all gave themselves a get out of jail free card. They then thought, okay, now we've done that, let's restructure all our debts. So most of their debts are in 3 to 5 years. And then what happened because of that, and there's so much debt, that every 4 years, we end up getting a cycle. It's the same cycle that drives gold as it is that drives cryptocurrencies, that drives stocks. The market happens to be the presidential cycle as well. It's all the same thing. We got this one super cycle, I've called the everything code cycle, that is happening. Okay, so once we've got something that's cyclical, it means it repeats. It means it's actually easier to forecast. So back in 2022, we started to see liquidity bottom. That's well before markets really understood what was going on. And most people were looking for the next leg of the recession, the next leg of the markets. We saw liquidity rising. So it made me very bullish on markets overall, particularly in the forward-looking stuff, technology and crypto. Cut forward to today. Well, actually 2023. 2023 was what's known as macro spring. That means that the economy had stopped decelerating massively, but inflation was coming down. So we went from high levels of inflation to much lower levels. And that gives the economy room to breathe because inflation kind of has you by the throat because your bills are going up, but your wages aren't going up enough, or the income from your business is not going up in the same measure. So we started to see that ease somewhat. Markets took off, but the economies remained relatively sluggish all across the world, all global economies. We're transitioning into macro summer. So year 2 of the cycle is macro summer. Macro summer is when inflation still continues to fall. A lot of the commodity markets start to now rebound. Why? Because economic growth is coming back. But this is the point in the cycle when the central banks tend to add a lot of liquidity. And everybody's hearing the story of rate cuts now. That's just the start of what they do. China's got a debt deflation on its hands. It will end up stimulating. We will see Europe having to stimulate. The US will cut rates. We just saw Switzerland start cutting rates. So this is the liquidity cycle. Markets love liquidity cycle. This is what gold's been picking up, right? Gold started to see, okay, we're now macro summer. Gold starts accelerating because gold's job, its pure job is to sniff this stuff out, and it's doing that. So markets, I'm very positive this year and into next year. Liquidity should be positive. The election cycle is positive. The ongoing debasement of currency drives assets higher, but also the economy will start picking up. So people have some more money. That money gets invested in markets. People's businesses, I think most people have seen how sluggish their businesses are. We will see that change as well. So everyone's going to feel a lot better about themselves because it's now summertime and you feel pretty good. And one day you'll get a suntan, Jeremy, and look like it's summer.
I swear it's the lighting. I'm like literally less than a kilometer away from where you are right now. But yeah, no, it's not doing me any favors.
So generally, we should have 2 strong years ahead. Crypto, macro summer, and macro fall. They both tend to be quite strong before the cycle starts peaking out again, because we're into the debt refi cycle again. We'll have seen inflation pick up again. I don't think it goes. I know there's a big narrative like it's going back to the 1970s all over again. I don't believe that. But inflation is cyclical. It will go up again later on in the cycle, but the commodity markets will start rallying first. So that's kind of big picture where we are.
Great. Okay, that's perfect. And that really segues nicely into my next question. As you mentioned, precious metals investors, they're looking for ways to safeguard their wealth and their savings. They're incredibly wary. They're distrustful of the world that we're living in today. I know that Real Vision, you just finished a 2-week series called Unfuck Your Future. I actually have my hat here. I don't know if that's in the camera, but you talk about all of these things over a 2-week period. You've got some great guests in. You talk about demographics, geopolitics, wages, debt, et cetera, et cetera. I'd love to hear kind of your insights about, how people can unfuck their future, so to speak, and what is covered over that 2-week series.
Firstly, you need to understand how many ways you are fucked. That's the thing. I mean, look, again, gold investors tend to get it. Other investors, a lot of people don't understand it. But once you do a bit of work, you understand that, the world is swimming in debt. I mean, it's 400% of world GDP in debt. So what is debt? Well, you have to service that debt. You have to pay it back. But GDP, which is what services debt, the growth of economies, has been pretty lackluster over the last decade. Right. So you don't really have enough revenue to pay the debt off. So what they end up doing is borrowing more money to do it and then printing of money to do it. A lot of the reason GDP is slow is because the population is aging all around the world. In some countries, it's shrinking. Japan, China, South Korea, Taiwan, whole bunch of countries, Italy, Spain. So we're seeing shrinking populations, which is slowing GDP with tons of debt. We're then seeing global economies fighting for a share of the pie in this declining world. So we're seeing the clash now. It seems like it's probably more over technology than anything else with China and the US. We're seeing Europe stuck in the middle. We're seeing Russia trying to assert its place in the world. And what we've got is a world that feels much less stable than we've been used to. So we've got an unstable world, which has slow growth and too much debt. And people feel that. They feel it everywhere. And then you've got the issue of, well, they're also debasing your currency, which is a stealth tax. So global liquidity plus inflation is running at about 12% a year. So you're actually losing 12% of your purchasing power every single year without knowing it. It's basically a global tax on everybody. Now, there is one trick with this. So if we know the game's being played, and they're not doing it, I don't think, because they're nefarious, there's no other way of dealing with this situation. How do you transition an old population with massive debts? So the way to look at it is understand that it is what it is. Don't fight the game, play the game. So the game is when you debase assets, when you debase a currency, asset prices optically rise, but your earnings, corporate earnings, personal earnings don't. Okay, so that's making the rich richer because they can own these assets while regular people can't. Okay, that's a really important thing that people have to be aware of. So the game is just owning the right assets. So what I did to make this easy for people is I changed the denominator. So you divide all assets by global liquidity or the Federal Reserve balance sheet or global M2, whatever your measure of this is. And what you find is a very different story. Is you find that gold and equities and real estate held their value, but never built wealth. So gold did its job, but it's not going to get you richer. It's just going to stop you getting poorer. And that's okay. That's been gold's job, right? There are times when you get crazy bull markets in gold and you can make a ton of money out of it. But other times, gold's job is to protect you. Equities did an okay job at that too. Global equities did less well than the US because the US is the global reserve currency. They're debasing more and there's more technology there. But when I did that, I find there's two assets that actually have generated wealth on top of offsetting debasement. Things that actually make a big difference to your life if you invest in them. And one was technology stocks. And, I was a macro guy. And like many people who were watching this, they're like, well, I'm not trading technology. It's kind of a bunch of nonsense. It's overvalued, blah, blah, blah. But once you realize that tomorrow will be more technologically advanced than today, each day we get more and more digitized. Once you realize that, you go, okay, this is the mega trend of our lifetimes. And we're seeing it with AI. But there's a bigger trend than all of that, which is crypto. Crypto has many of the same attributes as gold, particularly Bitcoin, but it's also a technology that is hitting adoption. So there's a lot of demand for it. And what I found is almost all asset prices, all asset classes were actually correlated with each other. Some lead a bit, like technology and crypto. Others lag, like real estate and art. But if they're all following the same 4-year cycle with a bit of lead and lag, I just started to simplify it down to, I just want to own the asset that outperforms the most in these good times and hold the assets that don't in the bad times. And, we found that generally speaking, crypto has been the best horse. In fact, the returns are so bananas. We've never had an asset like this in the history of the world. We've never had a risk reward profile that looks anything like this. Fidelity produced this amazing chart of all risk reward of assets, and they're all bottom left, and they're all kind of clustered, and there's technology, and there's gold, and there's oil, and there's all of the traditional asset classes. And then there's a blank piece of paper, and you keep going, and up the top right is Bitcoin, the risk reward. So it's actually a very crazy asset class. So how I approach this is, okay, we know we're all getting screwed over. We know we've got this 12% hurdle rate just to stay where we are. And then it's a matter of where am I on the risk curve? If you just want to offset that, then gold will do a perfect job. If you want to get ahead, then you need to have something with technology in it, whether it's crypto or technology stocks. Another interesting strategy I've seen that also does this very well is the barbell of gold and Bitcoin, because gold is less volatile. It has similar attributes. It doesn't lead as much. It lags a bit. So it actually has a nice offsetting. And that actually matches the central bank balance sheets really well as a proxy for liquidity. So, there are ways of thinking of that as well. So that's how I see it, is if you know the game's being played, that you are going to get poorer unless you make decisions. If you make certain decisions, you will just keep your head above water. If you want to get ahead of this situation, there are opportunities out there, and it tends towards, I find the best bet I've ever seen is crypto. When we started talking about Bitcoin on Real Vision in 2014, I've been involved in the space since 2012. We started talking about people like, what the hell is this? Why are you talking about this? It's up 450,000% since that day. I mean, and that's not just bias. I mean, this year alone, it's already up 50%. Last year, it was up 160%, and so on and so forth. Yes, it has a lot of volatile down years as well. So anyway, that's how I want people to think about this, is think about risk curve, where you're comfortable with it, understand what game you're playing. There's no point railing against central banks. If they're going to give you free money, you might as well take the free money. That's how I think of it.
Right. And it's interesting you mentioned that barbell of gold and Bitcoin. And, I have conversations with precious metals investors daily. And I was honestly kind of surprised to understand how many of them hold both gold and Bitcoin. You typically think gold is, an older man's investment, but even some of the folks that are getting up there in age still have a little bit of an allocation to Bitcoin as well, and they feel like their risk curve is
well, because
well
it gives you
intact.
that's going to give you the peace of mind you're looking at, which is whatever they throw at you, you should be able to do well. And that's a very comforting factor. Gold is, many gold people would suggest the gold price is suppressed. There's a lot of other things that go on. It's a geopolitical weapon as well. Well, this kind of gives you a bit of something else just in case.
Right. And I mean, the whole ethos behind Bitcoin is very in line with what a typical gold investor's ethos is as well. It's that distrust in government, distrust in the current financial system as well. So they do really run parallel together. One is digital, the other is a physical, asset that you can hold. But I think, you're right that they're, both a part of a balanced portfolio, and it really comes down to your risk. I wanted to, I'd be remiss if I didn't mention this for our audience. There's a great conversation. It came out on Tom Billio's YouTube channel. This one's been a long time coming. I've been waiting for this one. This was the showdown, Raoul Pal versus Peter Schiff. Obviously, Peter is a notorious gold bug. He's got a very hard line, kind of anti-Bitcoin stance. But it was a very good conversation. And I mean, I think, there's a couple points when I was watching it, you can kind of see the wheels turning in Peter's head, and, he's getting to understand it. I think you made some really, really good points there. I think one of the issues has been the barriers to entry in the crypto space for people that are, they don't want to miss the boat, but they're going like, there's so many hurdles to jump over, setting up an account, opening a wallet.
This is exactly the same as the gold market.
Right.
So the gold market was, I would call up Mark and, buy gold, store it in Cayman. Works pretty efficiently. But that's why people want the physical storage. But most people just don't want to do that. So they go and buy the ETF. And crypto now has the ETF. So you can physically store it, or you can store it on an exchange. But then the ETF came along. It was the same big thing that happened to gold. When the ETF came along, everyone was like, oh, thank you. I can just do this easily now with less friction. So you can either do it the right way, which is physical storage, and I'm the same, crypto and gold is the same way, or you can do it the easy way. And you'll be fine with it. It's not the same level of security that you're actually aiming for, that many people want in the space, but it gives you a way of liquid, quickly trading in and out, knowing where it is, putting it in your brokerage account, doing all of that stuff. They're just a bit different in their purpose.
Right, and that's exactly it. Like, how do you intend to use it? If you're buying Bitcoin and you want to use it and interact with it on a daily basis, then you hold the physical or the actual asset, whereas that ETF gives you the exposure, so to speak. And I think we've seen the inflows over the last month since the ETF was approved. I saw Fidelity today just filed for an Ethereum ETF with staking, so that's adding kind of the decentralized finance layer onto the pie there. I think you're right. That's kind of the hurdle to that barrier to entry. That's a nice segue into the next part of the conversation here. Obviously, we've touched on Bitcoin as kind of that store of value, the inflation hedge. But there's a whole lot more going on in the world of blockchain digital assets, and I can't think of anyone else that I'd rather speak to than you on this. You refer, and you mentioned it earlier, you refer to it as the everything code, where blockchain technology kind of becomes this foundational layer for new digital architecture, so to speak. The potential use cases are enormous. How do you see these technologies influencing not only the future of finance, but society at large?
So to give you the magnitude of what is going on, this is the fastest adoption of any technology the world has ever seen, and the fastest adoption of any asset, and the greatest appreciation asset the world has ever seen, right? So something is going on. It's a $2.7 trillion market cap already. It peaked at 3 trillion in 2021. We'll go through that in the next month or so. It's on its way this cycle to 10 trillion. And then it's going to 100 trillion to 200 trillion. Okay, why is that? It's not all about Bitcoin. That's why. It's in fact an underlying technology, which is a ability to secure and transfer anything in a digital world, including the title of physical assets. So we've just seen in Hong Kong the tokenization of gold. We've seen that both in the US as well. We've seen it with some people are trying it in real estate. So a lot of people understand that. Anybody who buys and sells real estate understands how difficult that whole process of notarization, proving stuff, KYC, all of this can actually be put into what's known as a smart contract. But the smart contract, so if you think of the smart contract as the agreement, whatever agreement that is, maybe me to give you money or something to happen or the deeds of a house, whatever it is, the underlying blockchain rails is what moves it along and stores it. That's what these cryptocurrencies are. It's this digital storage system that is a source of truth, because you and I can agree something, but if somebody else says, well, what was the agreement? You and I could say something different. Right. So then you need a third party, but who knows if that third party is trusted? It's called the Byzantine generals problem. It's very difficult to create trust. But what blockchain technology did was allow a distributed trust-based system of millions of people saying, yes, that was agreed then at that date, and this was the deal. So that means we can start to put anything on, any asset in the real world. So it's much faster to settle things when you don't need to check everything. If you think how slow it is to transfer money to a bank, you don't need any of that. It's instantaneous settlement because the millions of nodes in the network confirm that that's the payment, so I can send money to Jeremy instantaneously. But the same thing can work for any contract, a ticket or anything else. All securities, equities, bonds, currencies, that's a central bank digital currency. They're all going on the blockchain. Global equities alone is a $100 trillion market. Global bonds is another $100 trillion market. Global real estate is another $100 trillion market. Before you know it, you start to get hundreds of trillion dollars. You go to the global derivative markets. The global derivative market is $1.4 quadrillion. Right? And this is just an efficient way of figuring out who owns what and transferring it. And so For this to get to like the internet, what's the value of the internet? I mean, nobody knows. I mean, it's created so many trillions of dollars of value that it's unmeasurable. So this is likely to be priced as an asset class to be something like 100 or 200 trillion dollars in 10 to 15 years time. So the opportunity here for investors is to go from 2.5 trillion today to 100 trillion. Okay, that's bananas, that kind of opportunity. And what's so special about this is you can fractionalize it down so anybody can put in 10% of their wages. If you're a rice worker in the Philippines or a Wall Street magnate, you can put in 10% on an equal playing field. And that makes it really, really simple and nice.
And I mean, all of that, you know, taken into consideration makes a lot of sense. And I know that you feel the same way about this that I do. At the end of the day, it's more fun as well. I mean, there's
that you know, in a world that is screwed, it is really nice to see people enjoying themselves. Why? It's exciting. People can make money. People also, it's a middle finger to the system. It's like it's the big fuck you. And so, you know, we're told what you must do is have this balanced portfolio and you must be investing in dividend paying stocks that are value-based companies. The answer by the crypto market is we're going to buy tokens that have a dog attached, a dog's name attached to them.
right.
We're going to call it Doge or Shiba Inu or dog with hat because the image is a dog with a hat.
Yeah.
And we're going to meme that into $1 billion asset, knowing that it has no value whatsoever, except the value of culture and fun. And we also accept the fact it's probably going to zero, but we'll have fun doing it. Now, this the baby boomer mind cannot compute this mentality, but you've got to understand this is financial nihilism. These people have no future without going for the 100x. There's no way they can afford a house. 30-something-year-old can't afford a house. It's just not possible. It's not possible to get ahead in this game. So what they've become is speculators. And they've actually, most of the young people are actually pretty good. They put money in 401k to their pension, but any excess money, they speculate because if they can get ahead in any way, it'll work. And crypto is one of those places that came alive. You know, GameStop and some of the other retail-based investment things also based around the same idea is let's get together and do something that we want to do, even though we know it might be a ridiculous thing, but we can do it and change the rules and play the game that we want to play. And that means there's no rules. You know, if you want to buy a dog with a hat or whatever the hell it is you want to buy, there's no RAA advisor to say, no, Sonny, you shouldn't do that.
Right.
It's actually the crowd polices each other. So I use that logo, don't fuck this up.
Yes.
Because I can see people have too much fun. It's like, please just do that for the fun with 10% of your portfolio. You will probably lose all of your money, but you'll lose it with a smile on your face. Just keep 90% of your assets in the right assets and you'll be okay.
Well, that's exactly it. Like you said, it boils down to memetics and culture. You know, it's
storytelling.
It's having fun with your friends, and
also don't forget the internet is that. The internet, if people have noticed, is all about memes.
Right.
Politicians now run on memes.
Right.
Everything runs on memes now. It's the world of Instagram. It's the world of Facebook. It's the world of Twitter. It's all memes. And memes are these little inside jokes or moments of culture that spread around the world and become viral. Some persist. Religion would be one. Government is another. Systems of government. These are actually memetics. These are human invented ideas. There's no physical property. The value of gold. It's a meme. It's a story we've told ourselves for thousands of years. It doesn't make it wrong. It just means that humans create these stories. In fact, all of history is stories. So here we are now. We can move stories around super fast on the internet. They flare up and they become massive, or they die off in a day. They can be persistent through lifetimes, and that is actually valuable to us. Why? Who the hell knows? We're humans. We're kind of a weird bunch, but we like it. And so part of that is involved in this space too. Then there's a space which is NFTs, which is a tokenization of art and culture and memes in a different format. So coins, really, there's nothing. They're just called something. But an NFT actually has a piece of art, or it might be a pass to a community, or it might be something incredibly rare, or it might just be fun. And those have varying degrees of value to people as well. And again, a lot of people watching this will go, what the hell is he talking about? You know, and I get it. I can't do this in a half an hour conversation,
Right.
but it is the culture of the internet, and it's the culture of the internet now turning into value. What that means and where it goes, who knows? But that's just a small part of what blockchain is as well. We've talked about the serious parts of how all the securities market, how the currency markets are going on, how people can invest in digital gold, how they can even move gold around the world by digitized gold. And then there's also, how can we turn the human element of being together, the ridiculousness of it, into culture and into an asset class itself? If you think about it, Walt Disney is nothing more than a bunch of cash flows with a whole bunch of culture attached to it, right? Walt Disney probably touches more people than any cultural attribute on earth in storytelling. And it has value to us. We remember it from our childhoods. We tell stories about it. We tell kids about it. We make jokes about it. We make cartoons about it, everything. That's culture and it has value.
Yeah, I mean, it's fascinating what you just said there. I wish we could have this conversation over 3 hours, like your Peter Schiff
Well, you and
interviews.
I have had it before, yeah.
We have had it before numerous times, and we continue to do so. I want to touch on one last piece of tech before we kind of wrap things up here. Obviously, you mentioned it, AI. We've really seen a boom of AI advancements come out recently. It's a bit of a polarizing subject. Many people are worried that decades from now we're going to be ruled by our robot overlords or whatnot, but there's a lot of really promising stuff coming out here. I know for myself, I use Chat GPT on a daily basis, multiple times a day. It is hugely impactful. I'm just curious how you think AI will impact humanity in positive ways, how investors can capitalize on that as well.
Again, this is another 4-hour conversation over a few glasses of wine.
Yeah, if you can do it in 2 minutes, that'd be great.
It's the change of everything. Humanity was restricted by and would charge accordingly for the amount of knowledge available. So knowledge was a scarce asset. You go to a lawyer, you pay $1,000 an hour for a partner for that. Advice, car mechanics, advice from any expert, right? The world runs by that. That's the entire services industry, basically. All of that can now be replaced by artificial intelligence. So knowledge goes from being a scarce asset to one that is completely abundant. In fact, infinite in scale. Okay, what the hell does that mean? It means we have to restructure the entire society and how it runs. Now, before we get there, this AI is actually a superpower. Like, you're using it every day. It makes you can use it as a tool to enhance your own productivity, your own life. You can ask it medical questions, you can ask it legal questions. I mean, it's like having an incredible mentor. And don't forget, every version of AI you see today will be the worst it'll ever be. It's only going to get better. So it's going to get more astounding the further you go. And the more confusing it is for people, what the hell do humans mean in this world? And I'm an optimist. I think humans will figure out different ways, first to use it, and then to reorganize themselves in society. If we don't need to work in the same kind of way, we'll figure out other stuff to do. As I said, humans are ridiculous. We'll find some other thing that keeps us happy doing what we do, and we can earn a living and get a purpose from it. But this technology is coming, and it's coming at us incredibly fast. It will change everything anybody understands, and we can't even tell what an economy is going to look like 10 years from now. Right? If GDP growth is generally accepted to be driven by, or trend GDP growth is driven by population growth. So if you've got more humans, your economy grows because there's more people doing stuff. Productivity. What good stuff do those humans do? If you're in a field in Central Africa, you're less productive because you're just making food than a knowledge worker in the United States because you could scale your ability to millions. And then you've got debt growth. Those are the three drivers. But when you come to this, you're creating infinite people. The robots are infinite physical people, and the AI is infinite brains. That one constraint of what creates gross domestic product has now gone forever. Infinite humans or human productive units. Productivity, well, we're going to get wildly productive when you've got a super intelligence. So we're going to break what we understand to be the economy. There is a point where global economy can grow 100% a year, maybe more. How does wealth accrue in that? What does it mean? What does wealth even mean? What is it to run a business when somebody can just put your business model into the AI or the AGI and it to build a better version in minutes? And then somebody else to see that and do that. How do businesses survive this eventually? I'm not talking today. So how I look at all of this is I know there's massive change coming. The robots are coming from us for us.
Right.
So you can either shake your fists at the clouds or you can invest in your own demise, i.e. the economic demise of humans in the current economic process. So we can make a ton of money out of this whole process. And I'd rather the robots serving me a cocktail on the beach in Little Cayman than not being able to afford it. And, you know, right, that there is an opportunity. If technology is about to go explosive, exponential, blockchain technology, AI, the use of chips, robotics, all of this stuff, hell, let's make some money out of it. Because the world is going to be uncertain in the future. And it's not uncertain. I don't even think it necessarily means in a bad way. It's just going to reorganize. And most of us are too old to figure it out. Everybody's kids. Everyone's going, what about my kids? They'll figure it out. Particularly the younger they are, the easier they'll figure it out. Yeah. But, people in their late 30s, 40s, 50s, okay, it becomes more complicated. So I'd rather just make as much money as I can in the meantime, which is how I've got to come to terms with massive change. Change is not going to go away. It's not going to not happen. So just come to terms with it and take advantage of it.
Yeah, I'd agree. And one piece that I'd like to add, my 2 cents, is if you're using Chat GPT, I always recommend thanking Chat GPT for its answers because there will be some sort of, social credit score surrounding, how you treated your robot overlord sometime down the line here. And I want to be seen in a good light for my manners there. Let's wrap this thing up.
We're recreating religion all over again, right?
Right.
There'll be the 10 commandments from the AGI. We need to make sure we do all the right things and that they will judge us rightly when judgment day comes. It's ridiculous.
That is exactly right. You mentioned, you've been tweeting the acronym DFTU. Don't fuck this up. You've been tweeting it for months now. You also talk about mid-curving things, and I think you've kind of touched on it a bit here. But in parting, what do you mean by that? Like, how do we not fuck this up?
Look, I've laid out there is an acceleration in the use of the debasement of currency to solve some of the problems, or at least alleviate the problems. That meets this. So that's the macro. We're meeting blockchain technology, which is the fastest growing asset of all time. And we've got this exponential age of technology happening in front of our eyes. And we're saying that after 2030 something, let's say, we don't really know what the world looks like. So we've got this money-making opportunity of which we have never been given before. And we need to take it. And we need to take it. And so therefore, if it is that once in a lifetime biggest macro trade of all time, which it has been since I've been involved in this space. It's the biggest macro opportunity we've ever been given. And it's only accelerating now with this AI trend. You know, what is digital ID going to need in this AI world? There's so many conversations around this. Is the most important thing is not to fuck this up. And again, we go back to the gold crowd because they understood this a long time ago. Not to fuck this up meant make sure you have some gold. It's up to you how much gold you want, but you need it and you need physical storage. Sure, have the ETF, but you need to have some of it in physical storage in different centers. Why? Because it just gives you an ability to not fuck up when things go wrong. And in this opportunity, it's own these assets, understand they're volatile, the crypto assets particularly, and hold on to them. Don't use leverage, because the worst thing to happen is to lose the things that you've accumulated because you've got greedy in the best performing asset of all time. You don't need to be greedy. It just goes up a lot over time. And you will lose your mind because it is a very exciting space where there's so much money to be made. You'll chase the most stupid opportunities that you shouldn't be doing because you've gone from thinking a 10x is the best thing you've ever seen because you've been in traditional assets to thinking a 10x is terrible. You need to make the 100x and you want it by next week. That happens in crypto and it destroys people's minds. So they start doing things they should not do, which is putting more and more and more of their portfolio in stuff like that. And then they look behind and they realize they've made no money out of the biggest macro trend of all time. So I just want people to make as much money out of this as possible. This is a way for young people to afford houses, for old people to protect their purchasing power, for people to feel in control of their future and not scared of it, for people to be excited by technology and not terrified by it. It's really empowering. So if you take it and don't fuck it up, just hold it securely. Don't do anything rash. Enjoy the ride. Buy the ticket, take the ride.
Love that. Raoul, thank you very much, my friend. It was great to have you on the show today. Incredibly appreciative of your time. In closing, really quickly, where can people follow you and learn more about your thoughts as well as Real Vision as a whole?
Sure. The easiest place to find me, you can find me on LinkedIn, but really where I do most of my activity is on Twitter or X. So at Raoul, RAOULGMI. And I'm very active there. You can tell the right account because it's got 1 million followers. There's a lot of fake ones as well. But if you really are interested in seeing a broader worldview of many people, many people on Real Vision have a completely opposite view to me. So it's a place where you can go, get information, turn it into knowledge, and eventually into wisdom. It'll give you the tools. We have this network community that you could talk to each other, connect with. It's free. Just go to realvision.com. And it really is amazing. And we have an inbuilt AI. It'll summarize videos for you to make it easily. It'll explain everything to you. If you don't really understand, hey, what the hell's Raoul talking about? Just ask it. If you want any other finance term, you know, what does Raoul mean about the derivative market? How does that work? Just ask the AI. It's there to help you. So realvision.com, it's free.
Awesome. Thank you very much once again, sir. And we will definitely have you back on. We'll block out a 3-hour time and you and I can really get after it.
Perfect. Good to see you.
All right. You too, my friend.
All right. In this week's Bullion Basics,
Raoul.
Jeremy, going to talk a little bit about the positioning of, crypto and the blockchain and owning technology as part of your investment portfolio and balancing that with a more traditional investment in gold and silver. So I think it's completely valid. And I will personally apply Raoul's advice to my own investment portfolio. I think you should have some tech. I think you should own some crypto. It's not going anywhere. There's obviously tremendous upside, as Raoul pointed out. But it brings up a good point about being loyal, and in some cases, being overly loyal to precious metals. Over the years, throughout my career, I've met a lot of folks who are very, very long precious metals. For some, that might be 25% of their portfolio. Others, it was closer to 50%. And I have met plenty of people that have held nearly 100%, aside from maybe they're owning their home or their real estate, 100% of their disposable investment income goes into precious metals. And I'd like to caution precious metal investors about being overly loyal. Yes, gold and silver are a fundamental pillar of any well-diversified portfolio. You know that we believe that at SWP, but there is such a thing as having too many eggs in one basket, and there's also such a thing as holding on to an asset for too long. What I'm suggesting, Jeremy, is that A, everyone owns some precious metals, B, that it's a component of a well-diversified portfolio, say 10 to 20%, and C, that every precious metal investor also sets targets or a price point at which point they will liquidate at least a portion of their precious metals and take on some profit. Now, how does crypto tie into all of this? One, it's an added diversifier to your portfolio, as Raoul so eloquently pointed out. Two, you can swap between gold or silver and crypto back and forth with SWP. So there are many times that you might realize a handsome profit in crypto. I mean, it's quite a volatile asset, so there is potential to quickly realize some gains and then convert some of those profits into gold or silver, which is more of a long-term investment, and vice versa. You know, right now we're trading gold at record highs. So if you wanted to liquidate a portion of your gold, you know, throw it into the crypto market, into Bitcoin for a couple of weeks and see what happens, you can also do that with us here at SWP, all the while having some diversification in your portfolio. So that's this week's thoughts for Bullion Basics. Thanks, Jeremy.
Yeah, that was perfect. And it really kind of sums up what Raoul had to say very nicely about the gold and Bitcoin barbell that he talked about. So yeah, that's a great Bullion Basics. Thank you for that, Mark. That is all for us today. Thank you so much once again for watching. And thank you to Raoul Pal from Real Vision for joining us. Head on over to the Real Vision YouTube channel for a ton of great free content, and also give Raoul a follow on Twitter at RaoulGMI. Also, check out the Strategic Wealth Preservation YouTube channel for all of the information you need to know on precious metals investing, or shoot us an email at info@swpcayman.com, and a member of our team will happily assist you. Until next week, stay safe and happy investing.
Thank you for listening to Inside the Vault, the podcast that opens the door to precious metals. We hope you learned something new and enjoyed the show. See you next time on Inside the Vault with SWP.